All right, folks, listen, if you are a homeowner and you own a multifamily, 2-family, 3-family, 4-family, and you're thinking about selling that property, and that property is your primary residence, you live in one of those units, then you need to watch this video. So I'm going to tell you today what your agent isn't telling you. And it might not be your agent's fault. They just may not know about this. Or some agents really don't care. When you hire an agent, they're there to sell your property. They're not your accountant. So let's get into it. So I'm sure you guys have all heard about capital gains. You sell a property, you make some money, the government has a handout, they want part of your profit. That's just the world we live in, right? And you've also heard probably about that there's some exemptions that you can sell a property as long as you live there, that you don't have to pay taxes. And some of that is true. There are some rules. However, the rules change when you have a multi-family property, not a single family. So here's what we have. So right now in Massachusetts, if you own a single family home, and if you can prove that you've been living there for 2 out of the past 5 years, then there's an exemption on capital gains. However, there's a dollar amount. If you're a single person, that dollar amount is $250,000 in gain, right? So that means that you're protected up to $250,000 if you sell the property, as long as you don't make more than $250,000 on the sale, you don't pay any taxes on it, okay? If you make a little bit more, let's say you made $300,000 on the property, then you only pay the taxes on the difference, the $50,000, okay? Now, if you're married, then that exemption goes up. It goes up, it doubles. It goes to $500,000. So if you have a single family home, as long as you don't, if you sell the property, as long as you don't make more than $500,000 in profit, then that's fine. That money is yours. You're not going to pay capital gains on it, okay? On a single family home, cut and dry. However, multifamilies, different ballgame. So let's look at 3 families, for example. You have an owner, they bought the property, they live in one unit, the rents pay for the mortgage. It's a great situation. Now they're ready to cash out. Now, if you think because you're owner occupied that when you sell the property that you're not going to have to pay any taxes, you're mistaken, okay? What's going to happen is you will get an exemption for your unit, just your unit. You're going to get an exemption. But the other units, those are investment properties. You're going to pay capital gains on the investment properties, okay? So you need to be prepared for that. I run into so many, actually I have a woman in my class just recently told me she sold a multifamily. She had a 2-family out in the Boston area. The agent didn't mention anything about capital gains. They bought another property. Next thing you know, the IRS says, you owe me 80 grand. That's it. And this is a common situation that's occurring, okay? Just because the sellers were not aware of capital gains and how that's going to impact them when they sell their property. So what do you need to know about that? How can you sell a property and still maximize your profit and not have to worry about writing that check to the IRS? I'm going to get into some details with you. So I want to bring your attention to a tax code called 1031 exchange. If you've never heard of it, you want to become familiar with this, okay? And I'm going to help you with that. So here's what a 1031 exchange allows you to do. It allows you to take the tax liability, whatever you were going to pay in taxes, you can defer it and use that money to invest in another property or properties, right? But there's rules behind that. So instead of you cutting that check to the IRS and that's it, you're now able to take that money, invest it in another property, and you can make money off of that. The rule is when you sell that other property, that's when you pay back the money that was owed to the IRS. However, you can continue doing 1031 exchanges if you follow the rules. So what are the rules? Let's get into it. So rule number 1, the property has to be like-kind property. So what does that mean? That means that the property has to be another investment property. You can't buy a single family home or something like that in another state or another area. It has to be an investment property because that's what you sold was an investment property. Even though you live there, it's still considered an investment property. Now let's do some quick math, right? So let's say I bought the property for $100,000. I sold it now for $400,000. So I made $300,000 in profit, right? And let's say I'm married, so I have that $500,000 exempt. Now, there's 3 units. I sold the property. I made $300,000. That means roughly each unit, it's $100,000. So my unit is going to be exempt. So I'm going to have $100,000 that I'll be able to walk away with. I'm not going to pay taxes on. But the other 2 units, the other $200,000, I will pay taxes on that. And the amount's going to depend on whatever your tax bracket is, okay? And it can be, I believe it could be as low as about, I would say 20%, as high as almost 37%, depending on your tax bracket, okay? But this is where you want to talk to your accountant and figure that out. So let's just say my tax liability, the amount of money I'm going to owe in taxes, comes up to $60,000. Let's just say that, okay? So from the $60,000, I have 2 choices. I can either cut the check to the IRS and say, here's your $60,000, thank you, and that's it, right? Or I can reinvest it. I can defer. I can utilize a 1031. So I take my $60,000 and I look for another investment property, and I use that 60 as the down payment for that property. But again, there's going to be some other rules. So rules number 2, the property that I invest in, again, has to be for investment purposes. It can't be for personal reasons, okay? Number 3, the property that I purchase has to be for equal or greater value than what I sold my property. So if I sold my property for $400,000, the property I purchase has to be at least $400,000 or greater. Now, it doesn't have to be just one property. I can buy multiple properties that add up to the $400,000, right? So maybe I can find 4 condos in Florida at $100,000 a piece. Those are my investment properties. I'm going to Airbnb them out. That's it. I can do that. So rule number 4 is that you must not receive boot. And what boot is that you're making a declaration that the property that you're purchasing you're not going to use as your primary residence, or in the deal, they're not giving you any extra stuff that you're not claiming on your taxes to kind of bring that number down for your purchase, okay? So they want you to disclose everything. It has to be the same taxpayer. That's rule number 5. The same taxpayer is the person that sells the property and that purchased the property. You can't give your, whatever you're going to pay in taxes to someone else for them to purchase. So you have to make sure that financially you're able to buy that other property, okay? Now here are the kickers, the last 2 rules. You have a 45-day window from when your property sells. So the 3-decker, when I sold the 3-decker on the day of closing, I have a 45-day window that opens, that I must identify the property or properties that I am going to be investing in, okay? If I exceed the 45-day window, no more 1031 exchange. I have no choice but to pay the money, okay? So you have to move very, very quickly. However, once you've identified the property, you have 180 days to close on that property. So they give you some more flexibility there, okay? So those are the rules. So if you are seriously considering selling your multifamily, which honestly, I'm going to tell you right now, yes, you're getting top dollar for your multifamily right now. So if you're thinking about doing it, absolutely, I would do it. I would do it now in this market. But you have to be smart. Understand you're going to have a tax liability. Talk to your attorney. Talk with your agent. See if your agent is familiar. If your agent is not familiar with it, then talk with your attorney. Your attorney will understand and know what to do. Okay. Your attorney most likely is not going to bring it up because they're assuming you've already spoken to your accountant. Okay. Talk to your accountant. Get this paperwork that we need to have in place at the purchase and sales and so forth. So that way you can follow up with the 1031. If you are in the process of a sale right now and you're like, Louis, I did not know about this, and oh my goodness, I'm going to owe so much money. If you haven't closed yet and you're about to close, delay the closing. Talk to your attorney. Say, listen, we need an extension. I need to do this. This is what's, we need to do a 1031 exchange. If you have to pay for a rate lock extension or, give the buyer some money just to do the 1031, it's going to be worth it. Because I'd rather pay $5 or $10 grand now than have to dish out $60, $70, $80,000 or more to the IRS, where that money is gone. At least with the 1031 exchange, you can reinvest it in other properties and you have more money coming in. It doesn't matter that you stole all that money in the future. And then in the future, when you sell that property, if you sell that property, that's when you pay back what you owe. That's it, okay? But you can continue doing the 1031 exchanges. So you can just go from there and move on to bigger and bigger properties. That's it, all right? When you see these corporations just buy properties and are like, oh, this company bought this property, but it's just sitting there. Yes, they needed the property because the numbers had to make sense because they were doing a 1031 exchange. They had no interest in that property. There was going to be no purpose for that property. They just needed it because the numbers made sense, okay? So take advantage of it. I'm going to leave some information below as far as some more details and some more info on 1031 exchanges so that you can educate yourself. There'll be some contact information there. You can reach out to these folks and they can help, explain 1031 exchange. There is going to be, there's usually a fee, paperwork, that's added, maybe $1,000, $2,000, something like that to do the 1031 exchange. But honestly, it's going to be worth the money doing because you're going to save so much money in the end, okay? Well, I hope you found this helpful. If you have any questions, please let me know. Reach out. I will, try to help you the best as I can. If you've utilized a 1031 exchange, let me know what your experience was like. Did this help you? Was this worth your time and your while to do the 1031 exchange? I'm pretty sure it was, but let the people know so that way if they're contemplating that, they understand that this is for real. You can do this. This is legal. This is not, it's for you. You can use this to your benefit. Well, all right, guys. Well, listen, thank you. And until next time.